Have you noticed how every time the news gets scary, whether it's inflation, bank collapses, or global unrest, people start whispering about gold? It's like gold is this ancient, unshakable fallback plan. A little dramatic maybe, but there's some truth to it, especially in Germany, where people have a long-standing love affair with gold. Without much noise, Germans buy a lot of it, more than any other country in Europe actually. But if you're living in Germany as an expat, the rules and option around buying gold are probably not what you're used to. In some ways, they're better. In others, well, let's just say you want to know what you're doing before handing over any money. So let me share everything you need to know about how to buy gold in Germany as an investment, from coins and bars to digital options and ETFs. By the way, if you're new to the channel, my name is Ehsan, and on this channel we discuss how to build wealth in Germany. Let's start with a simple but important question. What's the point of gold in your investment portfolio? Gold is not a growth asset. It doesn't earn interest. It doesn't pay dividends. It doesn't build compounding results like stocks or real estate. So why do investors, especially in conservative markets like Germany, still swear by it? Because gold is a hedge. It's not about making you rich. It's about protecting what you already have. Gold holds its value when currencies weaken, when inflation rises, when banks look shaky. Historically, it's one of the few assets that doesn't rely on governments, central banks, or company earnings. It's financial peace of mind, a type of financial insurance that you sometimes tuck away and hope you never need it. That's why most financial advisors recommend keeping somewhere between 5 to 10% of your portfolio in gold or other precious metals. Not because it will outperform everything else, but because it's not correlated with everything else. And here is something surprising to many newcomers. Germany is a fantastic place to buy investment gold. You may ask why. Well, first of all, there is no VAT on investment grade gold. In many countries, you would pay 10 to 20% in taxes when buying gold. In Germany, if it meets purity requirements, which is at least 99.5% for bars and coins considered legal tender, it's exempt from VAT. That already puts you at a better starting point. Combine that with high consumer protection laws and a population that genuinely trusts physical gold, and you've got one of the most mature gold markets in the world. Now let's look at the three main ways you can invest in gold as a resident in Germany. Physical gold, bars and coins, gold-backed ETFs or ECTs, digital or vaulted golds through online platforms. Let's talk about the classic, holding actual tangible gold. It's simple and for many people the most emotionally reassuring way to invest. In Germany, you can buy gold bars and coins from a wide range of reputable dealers. The most well-known include Degussa, Pro Aurum, etc. You can visit physical branches in most major cities or order online. If you go in person, you can literally walk in, pay with cash up to 1,999 euros anonymously and walk out with gold bar in your pocket. It feels like something out of a spy movie, but it's 100% legal. If you pay more than 2,000 euros, the dealer is required by law to take your ID for documentation. That's part of Germany's effort to prevent money laundering, but for regular users, it's nothing to worry about. What to buy? For beginners, 1-ounce coins are usually the sweet spot. Popular choices include Krugerrand, Maple Leaf, Vienna, and Britannica. These are widely recognized, easy to sell, and have relatively low premiums over the spot price. If your budget is tight, you can start with smaller coins. Just keep in mind that the smaller the denomination, the higher the markup. If you prefer bars, stick with LBMA certified manufacturers. They're respected globally and easy to resell. Where to store it? This is the part most people overlook. If you're buying physical gold, where you keep it matters. Keeping thousands of euros worth of gold in a drawer, not a smart idea. So what are your options? At home, in a fireproof safe, make sure you get special insurance. Bank safety deposit box, which would cost you around 30 to 100 euros per year. Private storage services like those offered by Degussa or Pro Aurum. Some storage services even allow you to store gold outside Germany, usually in Switzerland, for added political diversification. Let's say you don't want coins. You just want a safe. You just want the exposure to gold's price without the fuss. You can look into gold-backed ETFs and ECTs. In Germany, one of the most popular is Xetra Gold. It's not technically an ETF, but an ECT, exchange traded commodity. The best part is that each unit you buy is backed by real physical gold held in a vault in Frankfurt. This is where the sponsor of today's video, Trading 212, can be a game changer. Trading 212 is a truly commission-free investment app. Unlike a lot of platforms that sneak in hidden fees or make it unnecessarily complicated, Trading 212 offers a truly zero commission experience with no fees to buy or sell stocks or ETFs. Even in Germany, the setup is super easy. You can open an account directly from your phone, and the app is available in English, German, and several other languages, which is great for expats or anyone comfortable navigating in English. And here's what I really like about it. It's perfect for beginners. You don't have to jump in with real money right away. The app has a built-in paper trading mode, which lets you practice buying and selling stocks and ETFs with virtual money. So you can build your confidence, test strategies, and learn how investing works without risk. When you're ready to start with real money, here's the best part. Trading 212 is giving you a free fractional share worth up to €100. If you sign up using the link in the description and use the sponsored code ESSEN, all you need to do is fund your account with at least €1 within the first 10 days, and you'll get a free fractional share worth between €8 and €100. It could be a piece of Apple, Tesla, or something else. It's completely random, but it's yours to keep, and it's a great way to kick off your portfolio. Now here's the downside. You don't get the same tax treatment as with physical gold. If you hold physical gold for at least 12 months, any profits from selling it is 100% tax-free in Germany. But with ETFs and ETCs, gains are treated like any other investment. They are subject to Germany's flat 25% capital gains tax, plus solidarity surcharge and possible church tax. So for long-term holders, physical gold can be more tax efficient. But for those who want convenience, liquidity, and security, ETFs are a great choice. One thing I would like to add here is that gold ETCs with a physical delivery claim are treated in the same way as capital gains resulting from the direct purchase of physical gold. Xetra Gold belongs to this category, meaning that profits from the ECTs will be tax-free after 1 year. Here is a list of other ETFs belonging to this category. Now we're in the in-between zone. You don't want to deal with the delivery and storage, but you do want actual ownership of physical gold. Welcome to the world of vaulted gold. There are many services that let you buy real allocated gold stored in professional vaults, often in Switzerland, Netherlands, or Germany. You get all the advantages of physical ownership without handling logistics. You can buy tiny amounts, even less than 1 gram, and sell instantly online. Fees are usually low, about 0.5% for buying and 0.15% annual storage fee. And your gold is your gold, not pooled, not a paper promise. Just be sure to read the fine print. Some platforms offer unallocated gold, meaning you don't actually own a specific piece. You just have a claim. That's not the same as real allocated gold with your name on it. Please hit the like button if you're getting value from the video and consider subscribing. Let's talk about the things that sneak up on gold investors. Because gold isn't actually cost-free, no matter how you buy it. Premiums. You will always pay a bit more than the market price, known as the spot price. For physical gold, expect 3 to 10% depending on size. Bars are usually cheaper than coins. Large bars like 100 gram or 1 kg have the lowest per gram cost. Storage fees. If you store gold in a bank or vault, expect annual fees. These aren't massive, but they add up over time. Selling costs. Dealers buy back gold below the spot price. The spread might be small, 1 to 2%, but it does matter, especially for short-term trades. Scams. Beware of sketchy online platforms offering discount gold, overpriced savings plans, or weird monthly subscriptions. If someone's charging you 5% monthly management fees, then what's the point of that investment? Reputable platforms exist. Just stick with those recognized by BaFin, Germany's financial regulator. Is now a good time to buy? That's the golden question, pun 100% intended. Gold recently crossed 3,000 euros per ounce for the first time in Germany. That is massive. It's driven partly by central banks hoarding gold and economic uncertainty. Gold prices have come back down a little bit, but does that mean it is a good time to buy? Not necessarily. Gold often moves in long cycles. And remember, the point of gold isn't to chase gains, it's to provide stability. If you're looking to hedge your euro-based savings, buying gradually through monthly purchases or small tranches can make more sense than trying to time the market. And again, don't go all in. Gold is a piece of the pie, not the whole meal. Practical steps to get started. Here is a simple checklist to buying gold as an investment in Germany. Decide how much you want to invest. 5 to 10% of your savings is a typical starting point. Choose the format: physical, ETF, or digital. If physical, pick your source: Tegusa, ProArom, or Gold.de. Store your gold safely, either at home safely, in a bank box, or through vault storage. If ETF, open a brokerage account. Always keep your documentation. For physical gold, this helps prove the purchase date in case you want to sell tax-free after 12 months. Now, gold won't make your heart race like a tech stock. It won't cash flow like a rental property, but it has something else going for it: resilience. It just sits there through crisis, inflation, political chaos, and quietly holds its value. That's why it has been a part of the German financial culture for decades, and why more and more expats are looking into it now. Whether you buy a few coins, stash a gold in a vault, or add a gold ETF to your portfolio, just know you've got options, real ones. And in uncertain times, that kind of clarity is worth its weight in, well, in gold. Don't forget to get your free stock with Trading 212 when you sign up and add at least €1 within the first 10 days. In this video, I share my complete roadmap to start investing in Germany. And in this video, I share how to learn 80% about taxes in Germany within just 13 minutes. So thanks for watching, bleib gesund, and I'll see you in one of these videos.